Up launched today, Household Capital. It's a new retirement funding product which claims to allow homeowners to access additional retirement funds by using low interest rate loans to transfer a portion of the value of their home into their super. Now, Household Capital says it fills a gap in the market for those baby boomers without enough cash in their super. Remember, those ones who haven't actually been doing the compulsory super contributions for years and years and years, for them to fund their retirement, but with equity in their home, estimated to be worth around $900 billion in Australia. And it's not a reverse mortgage, they say. The new company is chaired by former Labor Minister for Superannuation, Nick Sherry, and its CEO is venture capitalist Joshua Funder. Chief Business Reporter Leo Shanahan spoke with Joshua Funder about today's launch.
Joshua Funder, thanks so much for joining us.
Thanks, Leo.
Now, look, for starters, people would want to understand how Household Capital works and how it differs from other products on the market, like a reverse mortgage, for instance.
So, there's several big differences about how we go about it. Legally, we do take a mortgage on the house, and that falls well within the existing consumer protections for loans you make when you don't need to repay them monthly, you pay them at the end. So the full protections are there, but it's very different in a number of key ways. Firstly, we've restructured the way wholesale debt works, and that means we can come out with a cheaper and more efficient rate. And that's important because we're already well lower than where the banks were before they pulled out of the market. The second thing is to make sure that the customer experience of accessing their home equity to fund their retirement is very different than before. We use software and new approaches to meet the customer's needs, understand them, and help them meet their own retirement needs with their own money. And finally, we make sure that people look after their long-term needs and can have in place planning. That involves working with superannuation funds to top up super. It involves working with retirement advisors who have a best interest test for the customer to make sure their long-term needs are met. So from end to end, there are big differences in the way we're going about it.
Now, let's talk about demand, because obviously you think there is a hole in the market for this. Obviously, the amount of equity people have in their home is enormous in Australia, hundreds of billions or something, from what I understand. Where did you start to form this idea, and where do you think the most demand is going to be?
So I started to form this idea looking at the policy needs of Australians in retirement and making sure we could recognise that Australians now have to plan for 30 years in retirement. Now, we should celebrate that. That's a success that our country has delivered to Australians.
Well, we're living.
We're living. But at the same time, we need to make sure they've got financial adequacy and good housing to enjoy their retirement. And the gap for baby boomers in Australia is this. They got superannuation only halfway through their careers and at 3%. So now that they're at retirement or in retirement, it means that the superannuation isn't enough to get them through 30 years on top of the pension for most people. At the same time, Australian baby boomers bought their homes 40 years ago, and by the time they get to the retirement, the median home is worth more than $700,000. The median household superannuation is only worth $200,000. So Australian baby boomers, as a household, have saved almost $1 million, but they don't have access to most of it in order to fund their own retirement. So all told, you're right, there's $1 trillion of home equity that Australians already own and have saved in their homes. And our very simple approach is to make sure they have access to part of that home equity to complement the funding that's available for them to draw on throughout the course of 30 years of retirement, to help that retirement be active and to improve their well-being throughout retirement.
All right, so who are your partners in this, banking-wise? And does this work for all superannuation funds, or is it limited to certain types of funds? I notice you're working closely with industry funds.
No, it's a very broad approach.
Right.
People have a variety of needs. Some need to boost their super. Others need to pay off a mortgage at retirement. For other people, their super's okay, but they've got to renovate their house so they can live there happily for 30 years. If others have got their income and housing, they might want to give to their kids for first home buyers deposits or their grandchildren for school fees. So each individual retiree has a different mix of needs. For many retirees, though, the overriding need is they need more resources and access to their own savings to fund it. In terms of who we work with, we're working with financial advisors whose clients are running out of money and need to access more funding for retirement. We're working with super funds who often see retirees leave the fund or cash out their super because it's inadequate. Instead, those members of a fund, and it could be retail, it could be state government funds, it could be industry, could instead have incoming capital to support their superannuation and make it last the journey. So it's really, the important thing is people plan for the long term and they responsibly use their own home equity to meet their own needs. Those are the key things we're putting in place, and we can work with a range of partners to make it happen.
Where do you stand from a regulatory perspective? I guess in this kind of post-Hayne environment, people are asking, well, who's actually regulating these guys? How do they work? Are they a financial product? Do they work with ASIC? Do they work with APRA? How does that work?
So look, we're not a regulated bank, so we don't work with APRA. We work under ASIC, and ASIC's focus is consumer protection. But what we've noticed in the last year as we've been developing this product and now that we're live on market is our approach didn't need to change in reaction to the Royal Commission, and it had a widespread review of broking, financial advice, banking and superannuation. We also saw, partway through last year, the federal budget brought out a pension loan scheme. And that was really the federal government endorsing the role of home equity in funding retirement, not in consuming your equity, making sure you plan for the long term. And thirdly, from a regulatory point of view, it's important to note that ASIC itself put out a review of the legislation that covers home equity access in October. It meant that the regulations don't need to change, but what they observed is that if you use home equity to consume things in the short term, you often get left short in the long term. So what you need to focus on is long-term use of your home equity. So the regulatory environment's relatively settled for what we do, unlikely to change, but our approach doesn't challenge any of the regulatory settings at the moment. We work well back from the limits that are imposed, and we work well within the consumer protections to deliver those to customers.
Tomorrow, we'll actually talk to the Chair of Household Capital, Nick Sherry, who was the former Labour Super Minister. He's been in the super field now for a couple of decades, and a very interesting take on super in Australia and internationally. Well, Chinese tech company Huawei has spent the past year trying to convince the Western world that it needs the telco producer. Yesterday came other news that it will be suing the US government over a recent ban on Huawei products for US federal agencies. Already, Huawei CFO Meng Wanzhou, daughter of the founder, is suing personally the Canadian government for detaining and searching her before her official arrest. Underpinning the concerns of Western governments is Huawei's connection to the Chinese government. Well, the Australian government banned the telco from joining the 5G network in August last year. So what comes next? Long-serving Huawei Australia chairman John Lord was in Sydney and put the company's position to me. John Lord, it's very nice to have you here in Sydney. Now, we've just heard news that Huawei globally is actually set to sue the US government this week over its decision to ban Huawei and ZTE.
Well, I've only heard the news like you, Tiki, to be honest, and at the moment it is only media rumours. Yes. No official statement out of the company, but I understand from the media rumours that they're looking at a particular amendment to the Defence Act that kept Huawei and other Chinese makers' phones out of the US Defence Department. So
we've got that potential action. We've also got the Huawei CFO, the one that was arrested in Canada, personally suing the Canadian government. We've in recent weeks had that big speech from the founder, Ren Zhengfei, who says Huawei, the world needs Huawei, the US cannot crush Huawei. What is your reaction to how sort of proactive now Huawei is being globally?
Well, I think it's a company, I said this many years ago, and it comes across that way. It's a company that has grown so fast, it's learning how to be a truly large corporate player. And it's realised that you can't sit back and let people continually throw accusations at you. You've got to defend yourself. We in Australia have been defending ourselves for some time, as you're well aware, and so are the viewers. But Huawei has been silent, thinking their technology and delivering the goods would win the case. And they're finding that the world's not quite like that.
So you were quite shocked when the full ban on 5G came through in Australia, weren't you?
I was. Well, at the start of the year, I wasn't so shocked because there was starting to be rumours that the US had been talking to Australia about keeping us out. But we'd started talking to people. I'd started briefing ministers and different organisations, had discussions with the intelligence agencies in Canberra, and we were hopeful that we would be included in 5G to the same extent as 4G, that is, in the non-core operation. So the actual ban in that week, which was an absolute chaotic week in Canberra,